new revenue stream for Amazon.
Concern about them is the
anaconda in the retail sector.
It has to be
Cash will rain from 110 million global prime.
Apple made the decision only
addressable market. I think Amazon's a must-own in any portfolio. My biggest concern about them is the valuation. At a forward PE of 137, that's pretty high. So I'm wondering at this point about prime saturation in the U.S. market. You know, it seems that Amazon has very high penetration rates in the U.S., so I'm concerned about future growth.
I like to think of it as the, I suppose, the anaconda in the retail sector. It doesn't go for the quick kill. It goes for the slower squeeze.
This year, Amazon's in a bunch more countries. All those countries are on average like 50% cheaper in terms of pricing for Amazon Prime for an annual subscription. So they should have a bigger impact this year than they ever have before. We estimate around 110 million global Prime subscribers and over 50 million of those in the U.S. So the international part of that's becoming a lot more important.
There's a sector in our stock market and the global market where people do not value companies based on free cash flow. They value them based on revenue growth, with the assumption, and Amazon's the best example on earth, that at any time they want, they can turn the spigots, slow down the marketing dollars, and cash will rain from the sky like rain.
Amazon hitting an all-time high on Wednesday and giving Apple a run for its money in the race to becoming the world's first trillion-dollar company. Which stock, if any, will get there first?
It's like having to pick your favorite child. Luckily, I don't have to make the decision. I only have one. But I'm going with Amazon here. I think Amazon is firing on all cylinders, web services, Prime memberships.
Well, when you look at it financially, there's absolutely no comparison. Apple really produces 3 times more cash flow than Amazon. It has $150 billion worth of cash on hand versus Amazon. But here's the story. Amazon has a much stronger narrative. That's really the key thing. Investors are much more excited about Amazon's business than they are about Apple's business. And as long as Amazon can maintain its narrative, and that's really the key, if their earnings come in strong and everything looks very, very positive for the quarter going forward in terms of growth, I think Amazon is the one that reaches that target first.
The data that came out of Amazon Prime Day, I think the 2 most important data points were record numbers of new Prime subscribers. That's something we've been watching as an issue. And then secondly, the 100 million units sold during that time period.
You know, when I look at a stock with the kind of multiple that stock has relative to the type of margins that it's been able to generate, I think it's a bit of a head scratcher too, why, you know, people pay as high of a premium for that. And it has to be based on the market's, you know, outlook for the long-term future of that company.
The other thing, though, is this new revenue stream for Amazon called advertising, or AMS, Advertising Marketing Services, Amazon Marketing Services, and that's also a high-margin business. So we're going to expect probably another operating income surprise to the positive this quarter, like we have from the last 2 quarters because of AWS. If they show that, the stock can continue to move higher.
The total addressable market for global international e-commerce is why you want to buy this company. They just started in Brazil. They just started in other parts of Southeast Asia.
I still think that Amazon can tweak levers, the levers being basically margins, operating margins, and you're going to see them go from operating margins of 2.5% to maybe higher, and I think you're going to see the stock continue to go higher.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.